So the government has launched its next stimulus package. It is calling it Atmanirbhar Bharat 3.0. To discuss this further, I have with me the Chief Economic Adviser, Mr. KV Subramanian. Thank you very much, Mr. Subramanian, for joining us right here on NDTV. My first question to you is, and I'm going to straight away ask you this question because the moment these announcements were coming in, a concern was raised, and that concern was, where is this money going to come from?
That's a good question, Saket. Between March and now, there have been some important developments that have actually provided fiscal space. If you look at the external sector, especially if you look at the current account, in the first quarter, we had a current account surplus of $20 billion. Even if, rest of the quarters, the performance is actually half of that, we can still end up the year with a current account surplus of about 1.5 to 1.8% of GDP. And for a country like India, in an emerging country where basically investment should happen, a current account deficit of about 2% is what is desirable. Now, because the current account deficit is nothing but the public and the private sector savings minus the investment gap, that suggests that up to 3.5% of savings of investment can be made in the public sector. This has happened because of the good movement on the on the external sector. This is of course just on the current account, but capital account also has shown very good performance with a lot of FDI coming in. So overall, the external sector actually has provided us the necessary fiscal cushion.
Okay, Mr. Subramanian, again another concern is that the government has launched various relief packages. This is not the first, not the third also. There are 6 or 7 that have come in at different intervals. Hopefully there will be more also. But what's the time period you are looking at for you to declare that yes, we have recovered? See, a lot of people say, what according to you will be the point where you can declare that, okay, recession now ends?
Saket, I think it's important to keep in mind that we are still amidst the pandemic. And the impact on the economy, not just in India, but other countries in the world where also recovery is happening is because of the pandemic. So I think it would be reasonable to say that once we have the vaccine and large sections of population get inoculated, then life can be resumed, normal life can resume, at which point I think all the uncertainties will go away, and we can confidently then say that we basically have completely gotten out of the pandemic.
You're saying that economic recovery is directly proportional to the point when a vaccine will come into the picture? I mean, it's only normal.
Yes.
Yeah. Okay.
Yes, because this crisis itself is because of the pandemic, right? The lockdown and thereby the unlock phase have demonstrated, the contraction in activity that happened because of the lockdown and the significant recovery that has happened since then during the unlock phase clearly demonstrates that this is because of the pandemic. Until the the social distancing norms have to be followed, some of the sectors that are actually particularly impacted by the need for social distancing will be ones that will be back in full vigor after tourism, the need travel, for social distancing goes away.
Like tourism and travel.
Yes, tourism and travel.
Okay. Now, Mr. Subramanian, I have a lot of questions, but and I'll come to COVID in just a short moment in greater detail. But let's ask you, what according to you is your goal, the key result areas, as they say in the corporate world, in the short term and the long? What do you hope to achieve with these packages?
See, in the short term, what we have intended to do is to accelerate the recovery that is happening. If you look at the IIP print that came in yesterday, and you sort of look under the hood, there are important signs that we can elicit there. If you look at, for instance, the consumer durables, in the month of September, it grew by 2.8%, when last year, September 2019, it had actually declined by 10.5%. Non-durables has grown by about 4%, when last year it had actually shrunk by about 1.1%. Similarly, if you look at the IIP print, the 8 core sectors, there has been a clear V-shaped recovery, with the service sector actually not being as good in its recovery as the manufacturing sector. So the recovery has been two-paced. But even in services, the PMI, the Purchasing Managers Index, is actually about 53. So it is in an expansionary phase for the first time after February of this year. So the intent has been to try and accelerate the recovery that is happening. And there, the recognition that, demand side measures actually are important, and demand requires that people feel that they actually will have certainty of income for some time. And that is where the employment push is important. The push on construction, real estate, through both the PM Awas Yojana as well as the tax rebate for loan, homes below 2 crores. Those are important because construction is a sector that creates a lot of spillover effects in terms of demand, cement, steel, etc. So the effort is to try and accelerate the recovery that we are seeing, especially on the demand
this
side.
Point on employment, Mr. Subramanian, that you mentioned, one of the things that was mentioned in the press conference of Nirmala Sitharaman as part of this new package is incentives in EPFO for employers to get more people to the formal sector. You think that this can address the job crisis in the informal sector? Because, we were speaking to the former finance minister and he said that you can't just put out an EPFO dole and expect that suddenly this job crisis in the informal sector will vanish.
Saket, I think, if you look at the job creation that happened, the formalization that happened from 2011-12 to 2017-18, for instance, the percentage of casual labor had decreased by 5%, and salaried workers had increased by a concomitant 5%, and which translated into about 2 crore jobs. So the formalization is happening, and one of the advantages of formalization is that people feel a lot more job security. For instance, a survey that was done based on the on the PM Rozgar Yojana that was launched in 2016 and ended in April 2019 was that about 75% of people who actually of employees that benefited from this scheme felt that job security was a big, benefit for them. So, conversion into formal sector also provides a job security, and in the context of, uncertainty, that is also quite important. So, having, evaluated that program and looked at what was done in that program, the design has been done by taking the learnings from that particular program to sort of ensure that, the formalization as well as job creation can be enabled. One important aspect is that in this, and that's where a key difference is, that those people who have lost their jobs since, March, from March to September, those are also included in this. So if firms basically hire back, these people, that also is something they would be incentivized for.
Okay.
So based on the evidence from the previous program, where that's a similar incentive had indeed helped, that's how this program has been designed.
Okay. No, the reason why I ask you this question is because one of the things that was done as part of the first package is concerned, the 20 lakh crores, was for the MSMEs where loans were offered in that package.
Yes.
But a lot of experts who've been writing in, they say that the banks are not willing, banks are basically not lending, Mr. Subramanian, and that is a huge problem. Then how will the recovery take place?
See, the data on that, Saket, is that actually about 2 lakh crore of credit has actually been sanctioned as part of the emergency credit program that was part of the Stimulus 1. And in fact, looking at
that meet your targets? Does that meet the target?
The target was about, if I remember right, it was about 2.8 lakh crores, over the year. And so 2 lakh crore, I think the take-up of that has been encouraging, which is why we've actually extended it now to to many of the stress sectors, those that are identified by the Kamath committee, and to provide them credit, because the take up of this particular aspect of stimulus one was very encouraging, and that is why we've actually topped up significantly on that. We're looking at the performance, which is one of the ways in which this our response has been, that we've actually done it in a calibrated fashion, because we recognized by looking at some of the work relating to the Spanish flu pandemic, that this pandemic is not going to go away in a few months. And now, in fact, about 6-8 months into the pandemic, our judgment on that count has proved right. So seeing how things have taken up, we've actually then, topped up on the emergency credit scheme, because MSMEs actually seem to,
but Mr. Subramanian, like
benefit from
a very layman's perspective on loans is that the basic paradigm in a loan-based recovery is that people will have to pay back those loans also. That's the idea behind a loan. Now, these companies are already stressed. What if the loan recovery does not happen and you have more debts? Will the banking, I think that was the fear of the banking sector initially.
No, but I think one key aspect that you're not taking into account, Saket, here is that this was a loan that was guaranteed by the government. And so, even if, let's say, the loan, there was a default, and by the way, remember that there was a 1-year moratorium on all payments. So, during this time of stress, there was, no need for the MSMEs to repay these loans. The idea here is that, once the economy recovers, which indeed it is, MSMEs would be in a better position to be able to repay. And even those MSMEs that, let's say, still continue to be in difficulty, there is the guarantee from the government, for the bank, and thereby taking care of the risk aversion of the bank to not lend. And that's why we had included the guarantee as part of this loan, and which is why I think the take-up of that has been actually pretty encouraging, and we've topped it up significantly.
Now, one of the things, Mr. Subramanian, that has been mentioned by a former secretary in the Finance Ministry, Mr. Subhash Garg, and also a former Finance Minister, Mr. P. Chidambaram, they say that one of the big problems that is there in the government is that the budget estimates itself are not spent. The problem is not additional allocation, but spending of the money already allotted. A lot of this money goes unspent. Do you think that this is an area of key concern?
I think that is something that is being paid attention to. But, one of the, I'm a little sort of puzzled, because on the one hand, people also talk about the fiscal, how the fisc is, and at the same time also talk about money not getting spent. I have been consistent in saying that this is a time when we should just focus on growth and not worry as much about the fisc, because crises like these are ones where the government has to lead with its spending. And so consistent with that, I would basically mention that this is a time when that such spending should be done and money should be reaching the ground.
Okay. Mr. Subramanian, many reports suggest that inflation is at its highest right now, maybe in 77 months. You can correct me if I'm wrong on the facts, but now the fiscal deficit, which is already exceeded, is also shooting up. What is your estimate? How much should it be?
So there would be, of course, a significant slippage on the fiscal deficit front. But as I actually have been insisting, Saket, this is a time where we should be focusing on growth. One of the key aspects of good policy is that the objectives and clarity on objectives is maintained, because economics actually always involves trade-offs, and leaning on particular objectives is important. At this point in time, we must focus on growth. As regards inflation, a good part of it is because of food inflation, and that itself also, if you recall, all of us during the lockdown had stocked up on cereals, pulses, etc. When every household does it, the demand at the level of the economy goes up, and that also ended up pushing prices because supply did not change in the short run. And then inflations have this also tendency to inflationary expectations actually kick in, because of that. So I think that with the good crop that we've had a very good rainfall. The food inflation should moderate. What we are also seeing, in the recent print is that some of the the protein-rich stuff, inflation of that has gone up. Rural inflation is higher, sure, which is also suggesting that there are demand-side factors at play, which is actually, I would say, is a good thing, because one of the worries oftentimes with economic crises is about demand. The fact that rural inflation and inflation on protein-rich items, because what is generally true is that protein-rich items are demanded more when sure, when income goes up. So I think there is some demand factors at play. I'm not saying exclusively. Yeah. Apart from, of course, some of the supply side concerns because of the local lockdowns. But I do expect those to ease, going forward. But I don't think that we should actually take our focus off growth. We should continue sure, focusing on growth. In this trade-off between fiscal prudence and growth, we have to continue focusing on growth, because one of the key learnings from the 2000 to 2002 episode, when we had the Asian financial crisis, was debt to GDP went to 87%, historical high. But when growth came to 8%, actually that brought the debt to GDP ratio down below 70%. So that is the key thing. We have to actually focus on growth, because that will also bring debt sustainability in sure, going forward. Sure.
Since you spoke about growth and spoke about things being in print, what we also see in print, Mr. Subramanian, is a lot being written about the V-shaped recovery. Many people write that this is a myth, as the economy is opening up only slowly. So the slash of the other side of the V is also going to be slow. As a staunch proponent of the V-shaped growth, I want to ask you, how practically is it possible for this to be achieved quickly? Though the RBI practically seconds what you always keep saying.
Firstly, I was just looking at the IIP print data, looking at, for instance, the eight core sector, the IIP, the consumer durables, non-durables, capital goods, construction. What I'm seeing is, both on an actual basis and on a seasonally adjusted basis, all those charts are actually showing a V-shaped recovery. Some of them, not as much as others, but as I was mentioning earlier as well, if you look at things like consumer durables, even on a Y-on-Y basis, year-on-year basis also, there has been significant recovery. So, as always, I speak based on facts. My office actually tracks almost 60 high-frequency indicators on a bi-weekly basis. So I give my prognostications based on the data that I track very closely. So some of this V-shaped recovery is indeed manifesting, and that is being seen in the data.
Sure. Let's now come back to the point that you were making about COVID-19. You said that a lot depends on the vaccine. Now, COVID cases, Mr. Subramanian, are rising. Now, can you hear me? Can you hear me, Mr. Subramanian?
Your voice is very, very feeble. I can't hear you.
Can you hear me now? I'll try to be as loud as I can.
Yeah, I can hear you well.
Yeah, so you spoke about vaccine being very important for economic recovery. Now, COVID cases are rising. Isn't that a cause of worry?
So, Saket, I would continue to be cautiously optimistic because, as I've said earlier, that we're still amidst the pandemic. The pandemic is not over. And especially given the, what you've seen in Europe with cases rising, going into winter and the festive season, I think it is extremely important that all of us as individuals continue to follow the norms. I understand there is some fatigue that has set in, but we still need to continue maintaining this. So I would say that we have to be cautiously optimistic. If we don't have a second wave, I think that we are past the peak on the first wave. If you look at the rates itself, so fingers crossed on that dimension that we don't have.
In the context of economy, Mr. Subramanian, do you think that a lot of care needs to be taken now, particularly on COVID measures, because a re-lockdown, I know the government is not even thinking about it, nobody is, but a re-lockdown is going to have disastrous economic consequences. Is that the reason why following the COVID protocol becomes that more important for the economy?
No, absolutely. I think, all of us recognize that what we've seen since March, right, March of this year, is exclusively because of the pandemic. All the economic effects are because of the pandemic. So, therefore, the root cause is something that we have to continue paying attention to, which is the pandemic. At individual levels, I think all of us have to continue taking care. If you look at on a per capita basis, compared with all the other economies, we've done very well on, in our humane policy of focusing on, on human life, recognizing that GDP growth will come back, and it is indeed coming back, but human lives, once they are lost, will come back. I think that has helped in keeping our per capita death rates low, but that emphasis has to be redoubled now.
Also a word, Mr. Subramanian, just wanted to ask you also a word on testing. See, because you see the surge in Delhi, which has to do with greater amounts of testing, and that to the gold standard of testing, which is called the RT-PCR. Then you've got states where the testing is absolutely skewed. Do you feel that this is all going to have a direct economic impact? I mean, we may not be seeing the real impact of COVID-19, say in a Bihar or in any other state.
So in the testing itself, Saket, there is a lot of variation across states. But when you look at on an all India level, right, and WHO, for instance, has pointed out that if the positivity rate is greater than 8% approximately, then you're testing less, you're not testing adequately. And when you look at the India figure, I think using this particular parameter, it's very clear that at an India level, we are testing adequately, and there are some states which are actually doing a very good job of testing adequately. I think this has now become part of the protocol that states have to test adequately and thereby take the quarantine measures, which every state should follow, so that the root cause, which is the pandemic, remains in control, so that the economic effects actually do not. So
you're directly associating or linking COVID-19 with economic growth, and if people want their country to grow, they have to follow these COVID protocols. Absolutely. I think that's an important message.
Absolutely.
That's an important message. Okay, a couple of questions from our viewers. When I told them that I'll be interviewing you, so they've sent in a couple of questions. Let's see if you want to answer them. Number one is, how successful are performance-linked incentives for boosting the manufacturing sector now that it has been extended to 10 more sectors?
I think that's a good question. One of the aspects that stood out earlier, Saket, with the export incentives that we were giving was that it did not have any incentive for growth. It was sort of too democratized and did not provide the incentive for growth, which is something, even in the economic survey chapter in July 2019 on the presence of dwarfs, we had actually pointed out that a lot of the incentives that are given, the use of the taxpayer money, does not provide the right incentives. And that's something that the export PLI scheme has tried to fix by providing incentives for growth. And the couple of sectors where it was used, the response has been encouraging, and therefore it has been extended to other sectors, especially those sectors where the manufacturing potential is very high. Because if you look at the reforms, and that is another important aspect that I must point out, India is the only country that has actually done large-scale reforms, recognizing that the COVID crisis may be impacting potential growth, and therefore we don't want to let that happen. That's why we've implemented these reforms. There, I want to connect with the PLI, because the reforms are in two key sectors: your primary and secondary sector. Primary, which is agriculture, and secondary, manufacturing. So enabling sectors in the manufacturing area, providing them PLI, incentives based on that, actually is something that will also help domestic manufacturing. So that's the idea behind.
I think the last question has to do with what you have said. So Pranit Chaudhary writes, he says, how can the government claim new, and these are not my words, by the way, how can the government claim new economic packages if they are refurbished, recalibrated, and include very less direct cash stimulus? Isn't it misleading the common men and the champion industries? And Gautam Gunturi also says, does the government stick to the 2022 deadline for doubling farmers' income, where ground facts are completely inconsistent with the target? How would you respond?
Yeah, so firstly, I want to put to rest any concerns on this front about, rehashing. If you look at the jobs program, the way it's been designed with a focus on bringing back employment that has been possibly lost from March to September, that is completely fresh, and it's a new, aspect focused on bringing demand by providing the certainty of income. Similarly, if you look at the PM Awas Yojana and the focus on housing below 2 crores, thereby to actually accelerate housing and construction activity. These are aspects that actually are being used now. Sure. The emergency credit scheme that was actually part of only there in the stimulus one, seeing the encouraging response of that, something that we spoke about, that has been extended. So I don't think actually this criticism is quite justified in my opinion.
And farmers' income?
Yeah, on farmers' income,
can you meet your target?
That's a good question, because the reforms that have been launched, without those reforms, the acceleration that is required for doubling farmers' income would have been quite difficult to do. But now that the reforms, and possibly the first time in 74 years of independence, have been done, where the small farmer has the freedom to go and sell.
States are rolling it back. States like Punjab are rolling it back.
At the national level, these are actually ones that are will be there. And mark my words, those states that are rolling it back will actually in a few years see the impact, where farming activity will move away from states to other states where there are attractive options. Farmers will vote with their feet. And the number of those states actually is a few. In the rest of the states, these benefits will continue to remain, and those states will indeed reap the benefits of these reforms.
So these targets for doubling farmers' income will be met if the new farm reforms are implemented and if we don't have to spend a lot of time struggling with this pandemic. Are these the only two riders?
Look, that if is not as big an if as you're making out, Saket, because it's only a couple of states, 2-3 states, sure, that have actually tried to roll it back, and that is also primarily cosmetic. In India, the country of 28 states. What about the remaining 25 states where these laws will actually be indeed implemented, and farmers there will benefit? So it's possible that 3 states may not join this race in doubling farmer income, but the remaining 25 states can ensure that farmer income is doubled.
All right. Thank you very much. Pleasure talking to you, Mr. KV Subramanian, the Chief Economic Adviser of India. Thank you so much for speaking to NDTV.
My pleasure. And wish everyone a happy Diwali.
Same to you, sir.